In this video, I'm going to share 3 costly mistakes that can cost you thousands of dollars in your investing journey, and that includes myself as well. So this video is very important, so be sure to hit the like button on this YouTube video, and we know your time is valuable, so you can actually watch this video faster. Let's get into it. Nathan here, welcome to the YouTube channel, and in this video, I'm going to talk about investing mistakes. Whether it's the stock market, the crypto market, or even the real estate market, every single person can honestly raise their right hand and admit that they've made at least one of these mistakes. Yep, and that's myself included, hands raised up, and that's up to about $5,000 to be exact. Now, while mistakes are important to the journey, and hey, what doesn't really kill you makes you stronger, right? I'm going to go through 3 mistakes that I wish I knew when I first got started, and hey, in my heart, I do know that you as a beginning investor or someone along the journey will have or already has made at least one of these mistakes. But by actually watching this video, hopefully it can help you either recover faster, and if you haven't made the mistakes yet, you can actually skip right over them, all right? Let's get straight into the first one. So the very first one is investing money that you cannot afford to lose. And this is probably one of the biggest mistakes that anyone could make. This could generally be borrowing money to invest, or even using money that's actually meant for something important, such as rent, such as utilities, or such as paying off credit card debt. The idea of this is that people are using money that they do not currently have, or using money for other purposes in hopes that they can one day or in the near future actually double it. And this is gambling, buddy. As an example to this mistake, if you had credit card debt and you needed to pay that off, because credit card debt has 20% interest, probably one of the highest that you will ever pay. But at the same time, your friend comes to you and tells you that this new stock has actually about to IPO and it's gonna go to the moon. And hey, why not? Keep that credit card debt going, let it accrue interest, and you might make that money back. You might make double money back, so you can actually pay it faster. But that is a big mistake. In the short term, you could potentially win a thing or two, and there are cases where that has happened. But in the long term, no one is capable of winning that many single times. In the long-term viewpoint, you're slowly gonna go downhill. The second one comes down to understanding the difference between investing into the stock market and gambling your money away. You often hear the saying among audiences that investing in the stock market is like gambling in a casino, and there is some truth to that. But at the same time, both investing and gambling involve risk and choice. More specifically, the risk of your current capital in hopes of higher profits or gains. However, the key principle is actually to minimize the risk while maximizing the profit. And realistically, you can only do this by actually looking into and tapping into relevant sources of information, as opposed to actually just rolling a dice and hoping it hits black. Which, now that I think about it, I just quoted craps and roulette together. In the short term, gambling definitely has the potential to show higher gains, but at the same time, in the long term, investing with the required information, the most relevant information, is going to take you much further. Once you understand the difference between speculating on a penny stock that might go straight to the moon 10x, 20x, with no actual information backing it and purely just a friend's tip, versus being able to invest solely and specifically over time, over the next 20 to 30 years, with the fundamental understanding that companies in the USA and Australia are only increasing and they're getting better and better. They're becoming much more substantial to our economy, and knowing that and understanding that that will increase the share value over time. Know that fact alone, and you're gonna have a much easier time making money.
I'm really rich.
Now, the third one is actually trying to time the market. And if you've ever been in a situation where you've been about to hit the buy button, something in your mind just told you, don't do it, let's just wait till next week because it might be lower and you might be able to get in at a lower price. That's called timing the market. And it's actually a very bad habit because you're doing it based on no fundamental backing of information that's allowing you to make that decision. There was actually a really good read on Reddit, and I'm gonna pop a link in the description below, which really comes down to timing the market versus time in the market. And if you do wanna read it, click the link below and actually take a look. But to sum that story up, so someone went back the last 40 years in the S&P 500, which tracks the top 500 companies in the USA, and they actually identified all the peaks and all the bottoms at every point, every crash throughout the last 40 years until that point. Now, with 3 different investors ready to invest up to $100,000, they had 3 different scenarios, and this really identified and highlighted the reason why you should be focused more on time in the market versus timing the market. So the very first person invested all of their money at every single peak just before any crash or correction happened. So they were choosing the absolute worst times to invest at every single crash in that 40-year period. But at the same time, after 40 years, they still ended up turning their $100,000 into roughly around $660,000. By investing at the peak and watching your money crumble 30 to 50%, you're really gonna have those diamond hands to actually hold straight through. Now, the second person actually timed it perfectly, and this is basically the ideal situation that everyone wants to be in. This person actually invested all of their money at every single bottom. So think of the pandemic, think of how much it crashed. Imagine choosing that time 6 times over 40 years, and their $100 over the time and actually timing the market perfectly at every single instance turned into $950,000 after 40 years. Now lastly, there was the slow and steady one, the boring one that just invested in the S&P 500 over time. They just basically popped it every single month over the 40-year period, and you'd be quite surprised, but they actually brought in $1.3 million from their initial $100,000 invested. So what that does show is that time in the market over that 40-year period, regardless of all the tops and all the bottoms that are in the market, slow and steady actually won that race, and really shows why, instead of trying to focus on the one price that you should be looking at over 40 years, it really won't matter. So if you've made any one of those mistakes, please comment down below and let me know which one, and let's have a chat about it. I love kind of learning about what people have gone through and at the same time helping where I can possible. And if you're completely new and you haven't made any of these mistakes, then round of applause. Thank you for coming and watching this video, because you've just saved yourself a lot of money in the long term. And at the same time, go ahead and continue learning and actually investing in your own financial education. Invest a bit of money into the market, see what it's like to and feels like to actually have your money work on your behalf. It's really a great feeling, and at the same time can get pretty addicting the more money you have in and actually seeing that compound interest grow. So in playing devil's advocate, never actually invest money outside of your own comfort zone, and never invest money that you don't currently own and without things that you do not understand in. And don't invest in companies or tips that you have no fundamental understanding in. Always do your own research and actually see whether it suits your own situation. Whether you really love the company is a really good understanding of that too. I've got 2 other videos here that you might find interesting. I've got one of them there that actually talks about budgeting, and another one where I talk about stocks and crypto and my thoughts behind them there. If you want to keep learning about investing and financial education, be sure to check me out in those next videos. So I'll see you then.